Hey everyone, welcome to The Explainer. So today we're looking at a massive shift that's happening right under our noses in the global financial system. Just imagine for a second that the very foundation of how we save, how we spend, and how we move our money is being quietly rewritten. Because the biggest banks in the world, the legacy institutions that have managed our wealth for a century, are suddenly changing their tune on digital currency. But why? What's driving this sudden pivot? We're going to unpack the actual architecture of modern money here and show you exactly what's happening behind the scenes. Have you noticed something kind of strange lately in the financial news? These mega banks, the exact same ones that spent literally years dismissing digital currencies as just some passing fad, are all of a sudden completely obsessed with crypto again. But, and here is the crucial distinction, they are not talking about Bitcoin. They definitely aren't looking for the next dog-themed meme coin to gamble on, right? No, what they're actually focused on is an entirely different kind of technology. A technology that some experts are saying could become the most important financial innovation since online banking. All right, moving to section 1, the new banking obsession, moving beyond the crypto hype. Okay, let's dive into this. What these massive institutions are actually scrambling to build alternatives to are called stablecoins. To really grasp why this is such a big deal, imagine you want to send $1,000 from New York to London. Right now, under our traditional system, that payment has to travel through multiple banks. It hits clearing systems, it bounces between intermediaries, and it takes days to arrive. And honestly, if it's a long weekend, grab a comfortable chair because you're going to be waiting a while. At every single stop along the way, fees get deducted. It's slow and it's expensive. Now, compare that to a stablecoin transfer. Imagine sending that exact same money in seconds. We're talking 24 hours a day, 7 days a week. It's an instant, completely borderless promise. Which brings us to section 2. Enter the stablecoin, digital money without the crash. So what exactly is this tool that can just completely bypass all that legacy banking friction? Well, a stablecoin is simply a digital token designed to maintain a stable value, usually linked directly to the US dollar. The foundational concept to remember here is that one stablecoin equals exactly $1. It sounds incredibly simple, right? But actually, that simplicity is exactly what makes it so revolutionary. Now, what's really interesting about this slide is the contrast. When regular businesses hear the word crypto, they immediately picture Bitcoin. It's volatile, sure, it can rise rapidly, but it can also experience these dramatic crashes. If you're a business trying to run payroll or pay your suppliers, you just cannot use a currency that might lose 10% of its value overnight. You need predictability. Well, stablecoins completely strip away that terrifying volatility. Because they're pegged at a dollar, they are steady, they're predictable. And that is exactly why investors, businesses, and massive payment companies are becoming just utterly obsessed with them. Section 3. Disrupting the banking monopoly, the hidden turf war. Think about it. If this technology is so efficient, why are banks trying to build their own alternative systems instead of just using what's already out there? Well, our source material has this fantastic line that sums it up perfectly. It says, but this story isn't really about crypto, it's about power. See, for more than a century, traditional banks have essentially acted as global toll booths. They've controlled exactly how money moves around the world. Every single wire transfer, every international payment, every settlement, they all had to pass through those toll booths. And you guessed it, they collected fees at every single step of that journey. So the crucial point is this: stablecoins completely change the fundamental rules of the game. Because money can move directly across blockchain networks now, there are no closing hours, there are no weekends, and there are no borders. There's practically zero waiting, and this creates a deeply serious existential problem for traditional financial institutions. Because if billions of dollars start bypassing those toll booths and just moving directly through stablecoin networks, banks risk losing a major piece of their most profitable business entirely. And this brings us right into a classic technology disruption cycle. When a new tech threatens an existing industry, what does the old guard do? Step 1, they fight it. They criticize it, which, let's be honest, we saw for years with crypto. Step 2, they copy it. Step 3, they adopt it. Right now, something pretty remarkable is happening. We are entering that adoption phase. A lot of the exact same financial institutions that publicly criticize digital assets are now absolutely terrified of being left behind. So they're racing to build their own blockchain-based payment systems just to keep a grip on their market share. Let's look at section 4, the next internet infrastructure. Real-world usage is here. And this brilliantly illustrates why there's so much urgency from the banks. This isn't just theory anymore. Stablecoins have moved way beyond crypto day traders. We're talking about real companies instantly running payroll on a Friday afternoon. We're talking about freelancers receiving global client funds instantly without losing 3% to a wire transfer fee or having to wait days for the bank to clear it. We're even seeing the groundwork for online shopping with digital dollars that move as effortlessly as sending a text message. It's actively solving massive real-world friction. You know, whenever financial infrastructure fundamentally changes like this, new winners emerge. Let's actually draw a historical parallel here. During the internet boom, most people were completely focused on the flashy front-end websites. But the absolute biggest winners? They were the ones who actually built the underlying plumbing and infrastructure behind the web. And according to analysts, the exact same pattern is playing out right now with digital money. The infrastructure powering stablecoins is quickly becoming the new plumbing for global finance, which makes it one of the most massive investment opportunities of this entire decade. Section 5. Risks and the future. The hurdles ahead. Now, let's bring the excitement back down to earth for a minute, because it is definitely not a straight line to success. There are some very real hurdles ahead. First off, government oversight. Governments absolutely still want to say in how money moves, for sure. Second, regulators are fiercely demanding transparency to prevent illicit activities. Third, like we just discussed, the massive, highly capitalized traditional banks are fighting incredibly hard to keep their control of the system. And finally, we might even see entirely new forms of competing digital bank deposits emerge to challenge stablecoins directly. So the battle between crypto startups and legacy banks, it is completely up in the air right now. Yet, regardless of who ultimately wins this turf war, one thing is becoming undeniably clear. The financial system is permanently changing. The question isn't whether digital dollars will play a major role in our world anymore. It's really about how large that role will become. The next decade is going to entirely determine whether stablecoins just remain a helpful niche technology for some businesses, or if they actually become the bedrock foundation of a brand new global financial system. Which leaves us with the ultimate question, and one that's going to impact our global economy for decades to come. Will stablecoins and blockchain networks successfully replace traditional banking payments, or will the legacy banks find a way to adapt, copy the tech, and stay in control of the money? Seriously, think about how this power struggle might affect your own finances, because the biggest financial transformations, they usually happen before most people even notice them. I really hope this explainer helped you see what's happening right beneath the surface today. Keep questioning, keep learning, and I will see you in the next explainer.